Hello, today is Saturday. It is the 9th of June, 2012. There will not be any gold or silver charts in this video. There'll be three different stocks, two of which will be on multiple time frames. And we'll start off with just a few different things. This is risk reward. In a situation, if you're playing the stock market kind of game, those who can figure out the variables or the mathematics beforehand can oftentimes have an edge. Let's assume that you have 5,000 to put on a stock and you want to buy in at 10.44, stop loss at 9.17, and a gain at 12.61 with a simple methodology that you're going to either get out at a loss at whatever number, get out a profit at whatever number, and then just keep on riding it until it hits it kind of deal. Well, if you have your risk set up that it's lower than your profit, in this situation here, you're risking a little over $1 to make a little over 2. You don't have to be right half the time. In a situation like this, it would be 38.2% of the time. And now let's move on to, say, in a casino. If you wish to track the results in Baccarat, they will allow it. Not only will they allow it, but virtually every casino will have score sheets for you. If you're playing a poker game and you want to write down notes in between hands, what do you think the poker dealer will say? And how about a blackjack dealer if you decide to write down information between hands? Well, in poker, they're not going to care too much because they're getting paid a fixed rake or a tournament fee or session fee. So if you're playing a cash game, they'll take $1, $2, $3, $4, $5 per hand or something, or so much per half hour per player. If you're playing a tournament, they get so much per person to buy, and they don't care who wins, who loses, because they make the rake. In blackjack, however, they have a problem with it because they don't want you counting cards, because then you can use mathematics to your advantage, which is what they do themselves, but they don't want you to do it. Okay, and finally, in a situation, if the best 1,000 chart traders, whom are always ahead in the game with their methodologies, were the only ones trading, then who would be the winners? So assume that you take a top 1,000 people, you put them in some sort of platform, everyone starts with the same amount of equity, and then how do you think they're going to do? Well, the best of that group should come out on top, and the weakest of the group will end up losing. Like poker, this game must have a loser for each winner. Same thing if you put the 1,000 worst traders in. The best of the 1,000 are going to come out on top. Let's go through some of the charts. I'm not going through this. This is just to go through the methodology more than anything. I'll be making no plays at all on these. And if I think about it in the future, I might take a look at how these go. But this is a monthly chart. This is going to take a while to play out, but when you see something like this, this is about as basic as you're going to get. You get a direction from point A to point B. This is before the 2008 highs. This is the 2009 bottom. So now you got the move, and you're starting to reverse the trend. You find resistance the first time. You find support a little lower than you would have liked, but it did find support there. And now the next time, chances are greater they take it out. It does take it out. Therefore, within this is so simple. It either comes back down to 1344 and you go long, maybe you put a stop somewhere below here and probably sell here, or it goes up to 1988 in the next little while, and then you short the market here. Maybe you put a stop somewhere up here, and then maybe play for something down there. That's just a basic ideology of the play. Let's move on to NVDA. This is the daily chart for it, and quite frankly, when you take a look at this, you're seeing this in a downtrend. We got this high. There's nothing here stating that you should be going short, you should be going long, or anything. Nothing at all. But if we expand this out to a 3-week chart, rather than that of a daily chart, we can see a lot more. I've got the set up so that you don't really see any gap opens or gap closes. So I fix up because that's kind of like one of my pet peeves. But regardless of the situation, you have the point A to point B move. And then you come up the first time, you find resistance. Now you break through. And what happens here? Well, this is the exact same thing as the last chart that I showed, where it broke through in here. So now I'm going to be saying, once it comes here, I'm going to short. Once it comes here, I'm going to go long. Well, it went down to this point in here. Successful play. Where do you sell? You sell here at a perfect level. And if you short there, again, successful. So now you come back up to this top and you break it out. So here's the deal. You go long going here. That one didn't work out. 2 out of 3 ain't bad, as Meatloaf would say. And then it comes back, finds support in here. So 3 out of 4, there's a buying opportunity down there. And, well, it had a decent sized gain. But the thing is the second time, You really don't like it, and you don't play it there. But because of the fact that what I'd be looking for is I'd be looking for a move up to this level here, and then once it breaks down, then I'd be looking for a possible short situation. If you do it as it gets there on strength and maybe put a short up here or something, that could come to backfire, but the advantage of that is you get a much higher short price compared to in at 12 or 11.50. Final chart, and actually there's a setup within this, but that's not the reason why I'm showing it. And I'm going to show you a chart, and you tell me what's unrealistic about this chart. What is extremely unrealistic about it? The code is GR. They trade over 2 million a day in volume, so it's not any unusual chart. It's set up to not show the gap opens and all that, just a basic how a chart would look. But what is off with it? The answer is, look at the volatility within this. We have a high of 126.44. We have a low of 124.28. That's a difference of a little over $2 or under 2%. If you want to talk about micro volatility and then micro some more, this is exactly what it is at. But it is showing a nice setup. It's pretty much confirmed that it's not much of a gain, but it's going to come up to here. And if it's in a nice long bull market, it most likely is going to extend the gains. So let's expand this out a little bit. And let's take a look at the 5-day chart, which is pretty much a weekly chart, except it's 5 days every single time. The scaling is the exact same. So it's obviously in an uptrend. It went up, it came back down, and then it found another low. So it looks as if it might break it, but let's take a look at this again. But this time, the entire chart and the proper scaling. There we go. Notice something different happened here? The volatility was normal, and then it just stopped after it had this sort of gain in here, which is interesting to say the least. Now this chart here, I've eliminated all the gaps, meaning the normal gap opens, normal gap closes. And if we take a look at this again on the, let's see, I'm going to have to find it in my archives. Well, before we do that, let's just take a look at the volume within this. Or the volatility, excuse me. This is the last 23 days. This is the average moves per day, ranging between 0.15%, sometimes going as high as we'll say 61.8%. And if we take a look at the volatility again, over the last 133 days, well, it's never above 0.5%, except for here. It's always below 0.5% per day. And these are just quickly done charts over the last 193 days. Well, this is that big move that occurred, and then everything just went flat. Why this is going on, I don't know. I've never seen this before. So that's why I'm actually showing this. And as far as the volatility over the last 500 days, this is what you have. So finally, I'm just going to see if I can take a look at the one chart that I'm looking for, and this would probably be it here. So going back to the 5-day chart, changing the scaling up again within the averages. Quite frankly, you have this uptrend, then it goes sideways. This thing could just surge to the upside on a breakout. Now, and I guess when I say surge, I don't know if I should be picking a different word, but it's got the availabilities to maybe get up to about 127.5. That's a large gain of about a percent or so. Could you imagine a large move like this? Now, it might take about 6 or 7 periods or like 30 or 40 days, but something to keep your eye on. Thank you for tuning in, and hope you enjoyed today's video. Take care.